Big bank earnings are underway. Wells Fargo, Citi, JP Morgan, Bank of America, all reporting ahead of the bell. Fourth quarter results were solid, but warnings about a possible recession keeping those gains in check. You can see Wells Fargo, though, the leader of the bunch today, up just about 3.5%. We want to bring in Ken Leon, CFRA's Research Director of Equity Research. Ken, it's great to see you. So first, just your overall take, maybe one or two themes that you think really emerged from the results this morning.
So what we got today is that we're not falling off a cliff. The U.S. economy and the consumer are actually very solid. And bank management still don't know what the first quarter or second quarter will be. But we think we're going to cross the valley and hit economic recovery in the second half of this year. That's a good position to be with a change of leadership, maybe to value or income, and that would be banks. And I think some of the CEOs like Brian Moynihan, he actually said, 5.5% unemployment from my team. I think it's setting the bar low for surprise on the upside. Similarly, from the other CEOs, we actually saw a pretty stable, calm picture. There's no distress industries as far as commercial lending. And there was a little uptake in terms of building loan reserves for credit card or consumer loans, but very modest to get to the historic averages. We have a pretty good picture here, and the previous conversation talking about where did we hit bottom here, especially for bank stocks, was sometime in October, November.
Yeah, Ken, good to see you. It felt like it certainly could have been, it was expected to be worse. Let's go through a couple of these banks individually, and we'll start, of course, with JP Morgan. You raised your target by $31. Why? What jumped out?
Yeah, so we also went from a hold to a buy, even with a substantial investment bank that's underperforming. They got a 20% return on equity. They got a 37% dividend payout ratio, which means there's more room on the upside for dividend growth. And they also announced, back to this conversation, whether we have dark clouds or recession, renewing a buyback plan. The board and Jamie Dimon wouldn't do that if they didn't feel that things are getting a little bit better. So I think with JP Morgan, they're doing great as far as the lending side, and that look in terms of spreads. And even if we hit peak rates in the next month or two, we're still going to see much higher net interest income, not as high as before, but then we see the pickup in business or volume in terms of loan activity.
And Ken, when it comes to Citi, they warned that expenses could climb to $54 billion. That was quite a bit higher than what the street had been anticipating. I know you still have a hold rating when it comes to Citi. Why are you staying on the sidelines?
Well, we once had, as 30 other analysts may have had, a buy on the stock. It trades greater than a 50% discount to net tangible book value of over 81. And, anytime a management says we're doing a transformation, that means it's a multi-year restructuring. And they're really trying to finish the near term and get to midterm targets out 2 years. That's too long for my investment horizon for investors looking out 12 months. And you also have, what are the next catalysts? The ones we had in 2022 was selling off all the non-US consumer banks. That's done. So when we look at the bank today, we're not sure who is Citigroup going forward. It still has the highest percentage of international revenue, and they do compete against UBS and others. So I just think we have time to watch what Jane Fraser does at Citigroup.
You mentioned some of the commentary from Brian Moynihan, including the unemployment prediction. You raise your target there, and you reiterate a buy. What jumped out to you at BOA?
I think it's, if any large banks execute related to digital banking, getting the most out of their regional centers, and also having a strong position, as Wells Fargo has, in smaller middle market lending, it's Bank of America. And they still also have a monolithic, large wealth management business, and investment bank will come back as well. So they just do a great job in execution. They don't get rewarded for it like JP Morgan, yet they're going to be just as generous in terms of buyback of shares and dividend growth.
Ken, you also got a little bit more bullish when it comes to Wells Fargo upgrading the company to a buy from a hold. We know that they recently announced some changes to its mortgage business. CEO Charlie Sharp made some comments about that, just the fact that the bank needs to evolve as the market, as the picture does there. Why are you more bullish, or is that one of the reasons why you're more optimistic on Wells Fargo now because of some of the changes that they're making?
Yeah, so it's a good transition from Citi. So in a multi-year transformation, they're kind of like entering year 4, and we're beginning to see the fruits of their restructuring. What that means is they have a new management team in place at 2 or 3 levels. Additionally, they are driving attractive consumer banking, higher net interest income. The whole notion, with mortgage banking is they got rid of the bad parts, which was wholesale and correspondent mortgage lending, and they just kept the direct mortgage area, which is small. Credit card, they're 10 years behind their competitors, but Wells Fargo still has pretty good brand, and that means they should get an uptick in terms of card income overall. And then they're investing, 1, because of regulatory compliance issues, 2, to get more streamlined with a digital platform. So again, they're in a transformation, but much further along than Citi, and yet the stock's back at 42, 44, and we think it's at least going to 50.
Yeah, up about 3.5% today following these results. Ken Leon, as always, thanks so much.